Instead of being scared by the correction and thinking, oh no, the bull market is over. Yes, that's what the correction is designed to do. Shake your confidence, right? In bull markets, all the biggest moves are to the downside. And gold has had much bigger drops. Silver has definitely had much bigger drops than it had rallies. And that's a clear sign. These big drops are designed to scare you, to shake people out. And one of the reasons that the drops are so big is people are panicking to get out. Right? You get a wave of selling, and that's what's happened. An absolute fact, I can't lose if I own Bitcoin. Bitcoin can only go to the moon. Right? It can't even go halfway to the moon. In fact, it's going to pass the moon and leave the solar system. That's how much conviction there is in crypto. Now, of course, when you get something like that, when everybody thinks they can't lose, they all probably will lose. A lot of gold and silver investors got scared out of their positions over the past week or so, especially people investing in gold and silver mining stocks. Those stocks really got hit very hard. I think we've seen a very abrupt change of sentiment because a few weeks ago, or even a week ago, for the first time in my career, there were a lot of other people who were bullish on gold. And you may have thought, was that a cause for concern? Was that a contrarian indicator? Was that a sell signal because now, mainstream investors are buying? And I didn't think so, because this is just the beginning of mainstream investors' entrance into the gold market. It's not the middle, and it's certainly not the end. But I think a lot of people did have to get burned who came in, because bull markets never like to rise with a lot of company. They like to shake out the extra baggage, the weak players, the leverage players. So probably there was a little bit of too much short-term optimism. There wasn't nearly enough long-term optimism as far as I'm concerned. But in the short run, when gold was above 4,000 and almost hit 4,400, everybody was talking about it on, financial television. And I think for the first time in a while, people started to get interest. Some institutions started to get interest. Individuals who had ignored gold for years, if not decades, finally, maybe got into the market. And now, with an abrupt decline, not only have some of those short-term people been spooked out of the market, but I think they've left the market. They're scared because we had a sharp drop. But look at where we dropped from. We were almost at 4,400. We've had this big correction. Gold is now 8.7% below its record high from a week ago or so. We've had this 8.7% correction, yet we're still at 4,000. Most people would have expected the correction to start below 4,000. Instead, we corrected to 4,000. And I still think 4,000 is the support, even though we've traded below it. And I said that if 4,000 is support, that doesn't mean you can't trade 3,900. You could get under support. You just can't get below it by that much or stay there that long, or then you really can't call it support. But when I say 4,000 support, it's an approximation. Obviously, you can't draw a line in the sand and say there's no way the market's going to go below 4,000. Because if you think that, of course, it's going to happen, because people will get long and they'll put a sell stop at 39.99 thinking, they can't get hit. And so the market would go and take those stops out. So when I talked about 4,000 support, it was a range near 4,000. And in fact, in some of the violent sell-offs that we've had, I don't think I've seen the market below 3,900. I think we got close to 3,900. But then we got back above 4,000. And so to me, this is the support zone. This is exactly what happened when gold was at 3,000. And if you recall, when I said 3,000 was the new 2,000, and I was telling people that 3,000 was support. Yes, we traded below 3,000 on several occasions while I said it was the support. But then at some point, it took off and never traded below 3,000 again. I think the same thing is going to happen with 4,000. Yes, you're going to have some opportunities to buy below 4,000, but at some point, we're going to run out of those opportunities. The price is going to go well above 4,000 and never return beneath it. Same thing happened at 2,000, except we spent a lot more time around 2,000 than we did at 3,000. But I was saying the same thing the last time we hit 2,000, which was in early, I think, 2024, and I was telling people that this was the floor. Everybody thought that 2,000 was the ceiling. That's why you had all these companies downgrading Newmont and Barrick because they said gold has topped. It can't go up. And I said, well, that's a great indicator that it's bottomed and can't go down, right? When the mainstream is downgrading these stocks. And so it happened at 2,000. It happened at 3,000. It's happening at 4,000. But the fact that so many people have gotten so bearish so quickly, that's a positive indicator to me. I wasn't that worried that a few people finally noticed gold and wanted to buy it. But I'm certainly happy that those that did are already getting rid of it because they've been scared out of the market. Now, of course, I'm not scared out of the market. I've been long this market since gold was under 300. But maybe people that bought for the first time at 4,300, maybe they got spooked when it got down near 3,900. Even more so in silver. Silver's correction has been even bigger than gold's, although silver didn't drop this week. Gold was off about 2.5% on the week. Not quite $100, right? Because it had a higher close last week. But silver was basically flat on the week. Silver closed, it might have been up a little bit. I don't know exactly. It could have been up a dime or so. But silver closed at around $48.60-something an ounce. But silver has had a bigger drop from its peak than gold. Right now, silver is about 10.7% below the high that it hit, which was about 54.40-ish is where silver got. What's most significant about silver is that it broke through 50 and it got well above it. Now we've had our first correction. Yes, we've gone back below 50. It's not a line in the sand, just like 4,000 gold wasn't a line in the sand. But we're not that far below 50, 48.5. And I saw it, the lowest I saw silver this week was around 46.25. So that was an even bigger decline. But these are upper 40s. You know, silver was at 30 earlier in the year. And I was telling people you got to buy $30 silver because I thought that was the floor. And the next thing you know, we're above 50. Now, yes, I think eventually you'll never see sub $50 silver again. I think at some point we're going to work through some of the resistance here, shake out some of the new speculators that may have just entered the market. And then I think we'll take out 50. We'll take out that 54.40 high. We'll take out 55. And then we'll probably never trade below $50 again. Just like 50 was a massive double top, it's now going to be a massive bottom. And you're not going to have the opportunity to buy it. So in the meantime, these are good pullbacks. We haven't had a decent pullback in gold or silver in a while. You know, instead of being scared by the correction and thinking, oh no, the bull market is over. Yes, that's what the correction is designed to do. Shake your confidence, right? In bull markets, all the biggest moves are to the downside. And gold has had much bigger drops. Silver has definitely had much bigger drops than it had rallies. And that's a clear sign. These big drops are designed to scare you, to shake people out. And one of the reasons that the drops are so big is people are panicking to get out. Right? You get a wave of selling. And that's what's happened. The smart money that is riding this bull for the long run takes advantage of the decline. And in fact, the shakeout has been bigger in the mining stocks. If you look at the GDX, based on where it closed this week, it's down 15.3% from its high a week or two ago. And the GDXJ is down 16.7% from its high. And of course, a lot of stocks are down more. Just about every silver stock is down more than 20% from its high, which means even though silver is at $48.50, the silver stocks are in bear markets. Why should that be? Why should silver stocks be in a bear market at $48.50 silver? And of course, the craziest thing about the sell-off in the stock market or the gold stocks and the silver stocks is even though gold and silver prices have fallen, they're still a lot higher than any of the analysts believe that they would be when they